This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. China seems to be making a play to be avoided as an investment destination. But first, initial US jobless claims fell to just 192,000 last week when a small increase was anticipated. Still no labour market stress signals here. The total number of people on these benefits fell below 1.7 million, the lowest level of the year. The insured unemployment rate remains at a very low 1.1%. And the globally benchmarked Standard & Poor's Global or Market Factory PMI for the US rose in May from its steady state in April, although it did not get its boost from new orders this time. But new order growth was a feature of their May Services PMI, with an impressive display and a 2-year high. This May strength is yet to show up in the Chicago Fed's National Activity Index, which slipped slightly in April, but it is showing up in the Kansas City Fed's Factory Survey, which recorded a good recovery. It definitely did not show up in the April new home sales data, which in the month ran almost 8% lower than the year-ago level. The retreat has been gradual each month, but that has been relentless. The internationally benchmarked May PMI for Japan delivered its fastest expansion in 9 months. Their previously shrinking factory sector rose to a minor expansion, while their service sector expansion slipped slightly. India's PMI data continued its strong run in May for both the factory and services sector. A feature is the growing rise in exports, presumably benefiting from the China de-risking trend. And Taiwanese industrial production was up more than 14% from a year ago in April. That is partly a reflection of weakness a year ago, but for the past 3 months, the month-on-month rise has been impressive, and March was notably revised higher. Their retail sales growth was more modest, however, although its base was more solid. All of this comes before the full court pressure the People's Liberation Army is applying to the island nation, a crude show of force in the Russian style. Beijing's claim that they are prioritising business reforms rings hollow in light of the Taiwan pressure. In Europe, their economic recovery gained momentum in May, according to the provisional PMI survey data. Faster increases in business activity, new orders and employment were all recorded in the month, while business confidence hit a 27-month high. This recovery is being led by Germany. Meanwhile, rates of inflation in both input costs and output costs softened from April, but remained above pre-pandemic averages in each case. And Australian inflation expectations, as monitored in a respected Melbourne Institute survey, eased to 4.1% in the year ahead, down from 4.6% last month. The last time they measured actual inflation, it came in at 3.5% in March. And the globally benchmarked PMI for Australia delivered another small contraction in their factory sector, but a good expansion in their services sector. But both levels were lower than both March and April. New orders retreated in both sectors, but to be fair, the reductions were slight and the least in the past 3 months. And the tighter global security situation has seen container freight rates leap again, up 16% in the week to their highest in at least a year. The jump is all about outbound cargoes from China, which emphasises the risks of trade from there. The Taiwan situation will make this even worse next week. So far, bulk cargo rates haven't moved much in the past week, though. The US Treasury 10-year yield is now at 4.48% and up 5 basis points from this time yesterday. And the price of gold will start today still in a sharp downtrend, down another $51 to $2,336 an ounce. That's now down $119 from its all-time high on May 20th, a 4.8% retreat. And oil prices are down another dollar. It's $76.50 a barrel in the US, while international Brent price is down a bit less to $81 a barrel. And the Kiwi dollar starts today unchanged from yesterday at just on 61 US cents. Against the Aussie, we're firmer, up a quarter cent to 91.3 Australian cents and a 2-month high. Against the euro, we're firmish too, at 56.4 euro cents. That all means our trade-weighted index starts today at just on 70.4 and up 10 basis points from yesterday. And the Bitcoin price starts today at $67,776 and down 3% from yesterday. Volatility over the past 24 hours has been modest, however, just on plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.